Hello Scott, trust you are doing good.
Yes, I'm fine, thanks.
Alright, so do you have any question about our previous lesson, which was accounting equation?
Not at all, Ma. After the previous lesson, I fully understood the bedrock of accounting.
Anyways, if you feel confused in any way, you can always go the Supreme Nobles channel to rewatch it. I guess we are fit in for today's lecture. We would be treating effects of accounting transactions on assets, liabilities and capital.
I'm all ears, Ma.
So before we continue, since we have discussed assets, let's move to the examples so we can get better grasp of the topic. Assets includes fixed assets such as equipment, motor van, and current assets such as cash, receivables, stock, debtors, among others. In the same vein, liabilities includes loans, bills payable, creditors, etc. And finally, capital is just the residual interest of a business after all liabilities have been settled, or better still, is the amount used to start a business. Hope you understand all I have been saying lately?
Yes, Ma, I'm with you. You can continue the lecture.
Least I forget, in a transaction, there are effects on at least one of the elements of account. But most times, if affects two elements, either an increase or decrease or both in assets, liabilities and capital. For better understanding, let's take an example. Bought motor van with check. In this case, the motor van account, which is an asset, would increase because it was purchased or added to the existing motor vans. But banks, which is also an asset, would decrease because it was through check or bank the motor van was purchased. Therefore, this transaction affects only the asset, which increased and decreased at the same time. Another example is the purchase of machinery on credit. In this case, the asset, which is machinery, would increase just as it is in the previous example. But creditor would increase because he bought the machinery without immediate payment. In essence, assets increased and liability also increased. So Scott, any question on any of the examples I just gave?
Not at all. But I want to ask a question from my own example. If a question come like this: started business with cash, how are we to go about it?
That's very simple. The capital would increase same as the cash. It would also increase because it's the same money added to the business that would be added to the cash of the business. So the capital increased and asset increased.
Ooh.
So let's take just one more example, but you are the one to answer it. The owner of a business takes out cash out of his business. How would that be treated in accounting?
That's tricky, Ma. Anyways, the capital would reduce because the owner withdrew from the business, which would also affect the financial strength of a business. Also, cash would decrease because he took it in the form of money. The capital, as well as the asset, reduced.
That's very sweet of you. So this is the point we would terminate this class. Hope you understood all that was taught.
Yes, Ma. I can't wait for the next lecture.
So don't forget to tell your friends to subscribe to the Supreme Nobles channel, in order to get more understanding on concepts of accounting. Goodbye then.